Hello. Welcome to eCommerce Expert, and please subscribe to our channel. It really motivates us on what we are doing to help others. Tax season is here. Have you filed yet? We know, it's not the most exciting time of year. But it doesn't have to be a total bummer. If you're in a new business, there are plenty of things you can do to lessen your tax liability. Are you worried about the amount of tax you must pay? Tax planning is a way to limit your tax liability and keep more money for yourself. It can help you lower the amount of tax you owe, reduce your tax bracket or your tax rate, or time management of when you must pay your taxes. It can also help you get the most deductions and credits to lower your liability. Why do all this? You can use it to help you and your business grow by investing in new equipment and hiring new employees. In order for your new business to be successful, it needs to grow. One of the most important ways it can do that is by reducing its tax liability with tax planning. Tax planning involves lowering the amount of tax you owe, reducing your tax bracket or your tax rate, and taking advantage of deductions. It also means managing your time so that you're paying taxes at the right time during the year, not only because it's required by law, but because it's also smart business. To give you an example, if you are a sole proprietor and you make $60,000 this year, you pay 15% on the first $9,325 of your income, $1,053, and then 25% on the rest, $49,975. Your total tax liability is $5,425. In contrast, if you are an S corporation with exactly the same income this year, $60,000, but you have an employee who makes $50,000 and another employee who makes $50,000, you pay 15% on all their incomes, $30,000 total, and 25% on all their incomes after that, $20,000 total. Thus your total tax liability is only $5,100. When you start a new business, there are a few things you can do to save on taxes. Some of these include time management. You need to be aware of your tax deadline. You will have to pay taxes on all income you've received and any deductions you take before April 15th, although this date can be extended if you file for an extension. The first couple of years, it's a good idea to pay quarterly, every 3 months, so you'll be more prepared for the April deadline. Larger businesses have to submit their taxes quarterly, but smaller ones can pay annually. Lowering your tax bracket or tax rate. There are certain jobs that don't require paying taxes, such as bartenders and waitresses who earn tips. If you do owe tax money and don't have the money to pay on April 15th, contact the IRS and ask them what they can do to help you out until your next paycheck or until you get loan money to pay off your balance. One way to lower your tax rate is by taking deductions and credits. There are many ways that companies can deduct costs when doing business, such as having work done in specific locations, like a high-tech building. Knowing which expenses are. Reducing tax liability. It's the amount of money that you owe to the government for taxes on your business or personal income. For most people, this is based on the amount of income you have earned. If you are self-employed, then it is based on your net earnings, what you earn after paying for all your expenses. The bad news is that tax liability isn't just about how much money you make, it also depends on when and how much you pay into Social Security and Medicare, as well as any other deductions or credits that apply to your situation. So what can you do to reduce your tax liability? Here are some tips. Lowering your tax bracket or tax rate. You can lower both by making more money throughout the year and increasing your taxable income. You may also be able to lower them by taking more deductions, if that helps lower how much of your income. I know how important it is to make every dollar count. When you're a small business owner, taxes can really add up. It's not just the money, it's the time you waste stressing over when you'll have to pay, which tax credits you can claim, and whether or not you can afford that equipment upgrade you need. And in the end, there's always that one pesky thing, the nagging doubt that maybe you could have done more to take deductions and lower your liability. Thank you for watching, and don't forget to subscribe. like and share our video. Leave a comment too on what you would like us to cover next or any idea.